Brad Thomas here at the Street. I'm joined today with Brad Case, Senior Vice President and Director of Research with REIT. Brad, good to see you today.
Good to be with you, Brad.
Great. Brad, what is REIT? What is the REIT organization?
REIT is a nonprofit organization whose purpose is really to serve the REIT industry in several ways. One of the things that we do, one of the main things that I do, is to research on various aspects of investing in commercial real estate, and we share that with investors.
Great. Well, we've seen a lot of news today in the REIT sector, Brad, and Dr. Case, I should say. And tell us what is driving the REIT industry today, and what's the value proposition for investing in a REIT today?
Well, I think the main story in today's market is just the fact that the economy is strengthening, and people who own real estate are going to participate in that strengthening economy, because when companies take up more office space, when people do more business travel and vacation travel, they demand commercial real estate. When companies are doing more trade, they demand warehousing and industrial facilities. And so providers of commercial real estate are going to benefit from the strengthening economy, and investors can benefit from that by owning stock in the REITs that own that commercial space.
Great. Well, Dr. Case, we've seen a very significant sell-off in the REIT space since end of May. What is causing that sell-off, in your opinion, and how do investors react to the threat of rising interest rates today?
Yeah, I mean, I think the interest rate story is what's really been driving investors. The concern is that the Federal Reserve may pull back its stimulus of the economy too quickly, send the economy back into another recession. I just don't think that concern is very well founded. And the other part of it is I have heard people describing commercial real estate as sensitive to interest rates, and that's simply not true. If you look historically at what has happened to REIT returns during periods when interest rates were increasing, I went back to the beginning of 1995 and I identified 14 episodes of increasing interest rates, and in 9 of those episodes, REIT returns were greater than average. In 2 others, REIT returns were negative, so interest rates went up and REIT returns went down. And in 3 others, REIT returns were positive, but not very impressive. So most of the time, historically speaking, when interest rates are going up, REIT returns are actually better than average. Why is that? It's because interest rates go up because the economy is improving, and that's good news for commercial real estate investors. Commercial real estate is very different from bonds in that sense, and you can't think of them the same way.
Great. Well, Dr. Case, what about inflation? How do REITs prepare, and how are REITs preparing for potential inflation?
Yeah, a lot of people are concerned about inflation going forward, and I'm one of them. What we've seen historically speaking is that commercial real estate, and REITs in particular, tend to be a good investment when inflation is higher than normal. The problem is we haven't really seen very high inflation since the late 70s and early 80s. So you have to take the historical record with a little bit of a grain of salt, because the REIT industry is so different now than it was back at that time. But what we've seen historically speaking is that when inflation is relatively high, commercial real estate owners are generally speaking able to increase rents. Sometimes it's automatic, sometimes it's just that they have the opportunity to increase the rents and customers are willing to pay. And so as a result, income goes up with inflation, and commercial real estate REITs tend to be a good investment during times of inflation.
Finally, thank you, Dr. Case. Finally, I refer to the real estate cycle sector as a cycle. Every business has a cycle. So are REITs in the first inning, the third inning, the sixth inning, or the ninth inning? Where are we today?
I'd say about the third inning. The thing you have to keep in mind is the commercial real estate cycle is about an 18-year cycle, much longer than the stock market in general. It doesn't mean they never move together. They certainly went down together during the liquidity crisis. But the last 3 real estate cycles have been very clearly about 18 years each. And we're only about 5 years into this cycle. So I'd say we're in about the third inning. Investors, I think, can expect to see increasing earnings by REITs as the economy improves, and I suspect that's likely to go on for a long time.
Dr. Case, thanks so much, and we look forward to seeing you next time here at the Street.
Oh, it's a pleasure.
Thank you.
Yep.